The rally in global equities since last March low that we have seen has resulted in expansion of the price to earnings multiple. Now, a closer look reveals that it has been the price aspect which has driven the expansion of the PE multiple as well. And recently we have been seeing a lot of upgrades that have come out for Indian equities. For instance, today morning we had Credit Suisse that had in their Asia strategy report mentioned India becoming an overweight counter for them. Now what they have said in their note is they have switched from China and Thailand towards India and Australian equities as well. And interestingly, they point out that the EPS momentum going forward will be the key reason to watch out these two particular countries that they are turning bullish on. And they have in fact upgraded India and Australia to an overweight stance, while they have downgraded Thailand from an overweight to market weight stance as well. Some of the reasons why they have mentioned that India could perform well is that they expect that normalized output will return into India very soon, and that the economy as well as the credit cycle are at a very early stage. The India's bank to credit GDP is the second best that we have had in all of APAC. So some of the reasons that they have highlighted are really sounding bullish on India. But that brings me to the price to earnings multiple and the earnings momentum that they have been referring to. The PE expansion that has happened has resulted in the fact that MSCI World has now been trading at about 35 times price to earnings multiple, which is the highest that we've seen since 2009. MSCI Asia is trading at about 29 times, the highest that we have seen since 2010. And the MSCI Emerging Market Equity Index has been trading at about 27 times, which is the highest since the start of this century. If you have a look at the Nifty's price to earnings multiple, that's at 36 times trailing multiple, which is the highest ever that we have seen for the Nifty as well. But the earnings outlook, that is the most interesting bit that I want to highlight. Because the EPS estimates have started seeing upgrades for themselves since quite some time now. This year itself, the MSCI World Index has seen an EPS upgrade of about 4%, while you have MSCI Asia that has seen 1.7% upgrade, and the MSCI Emerging Market Equity Index has seen an upgrade of little over 2%. While the Nifty Index, that has shown the remarkable amount of upgrade that we've had to the tune of about 3.5%, and that's the highest among all the other indices that we actually track. So it is the earnings growth potential that is actually driving the upgrades for the Indian equities in recent times.